All right, hey guys, Sam here. So I had a request from a member to take a look at Bitcoin Cash today, and I thought we might do that. Of course, everybody's got their eyes on Bitcoin with this just insane volatility that we're seeing. But Bitcoin Cash is not to be discounted here. As a matter of fact, it's trading quite technically. So there's some things to learn here, and perhaps some opportunity. So I've got Bitcoin Cash here to the US dollar tether on Bittrex, and a few things to take note of here. So now, of course, you can't discount. Let me go back here. If I go to a 4-hour, you can't neglect all what happened back here. So we got to look at this. And so here's the fork and this volatility. And I'm wicking this not as a potential wave one, but just as structurally, potentially some support there, prior resistance offering some support, and while we do wick through it, we do bottom in that range, and then as I've shown, I believe I've shown this on prior videos. Let me open this up so we can see it a little bit better. There was some technical selling, some algo footprints on the way down. So if I just pull here to here, here's the 50, there's the negative 23, so clear algo activity. Then if you were to pull again, and we pulled here, then we go up to the 50. Now they fail to get to their target there. They fail. So we start to see the market turn around here, and then we're breaking. We break the Vegas wave here. There's the first pushback. So we have this long correction here, and then we ultimately get a low that we can work from. So we have a reasonable pivot. Of course, algos are in here. This was just textbook right here for their target. But now we take a look here. This is the first. Let me go back to the hour. We start to get some subdivision here that's meaningful. That's something that we can work with. So let me open this up, so you can see from that low, you get it's very easy to spot. I don't even need to label it. We get a 1, 2, 3, 4, 5, and there we go. So we've got actually, let me just check this here. This is kind of interesting. Yeah, so we've got a diagonal, right? So we get a slight, if this is the 1, 2, 3, 4 gives us a slight overlap. So we get a leading diagonal, which we can find in a one wave or an A wave. So that works. And given that, we've got this good low here, this absolute low from the correction. We have our one high here, and then we have this 1, 2. So given that, we have this pivot to work from. So if I pull this up a little bit, do we stay technical? If we've got a good pivot here and that's a 1, well, we're shallow on the 2, right? We don't quite. Let me move this off just a bit here. So we don't quite, you can see it, we don't quite make the 50. So, perhaps that's some front running. It's hard to say. That's a shallow 2, but it's not unheard of. We're not that far in front of the 50. So likely that's a front run. And you see the spike down, likely, that's, perhaps some market manipulation there for a push down. When you see that kind of reaction, and look what happens next. That's often some market manipulation. We can see some subdivision here. So you've got an A, B, probably a B, and then a C. So if I were to open that up, again, it's worth doing this just for the exercise of it to see, is that my A? There's a 3-wave B, so I would want to measure that just to get a handle on how it's just, 1, for the educational exercise, 2, to get a handle on how it's trading. Well, we go right to the 1272. And that's not uncommon. So if we have an A, B, and a C down here, that's a very common target. If we're going to go through the 100, which is here in maroon, the next logical target would be the 1272. And just out of curiosity, just again, it's worth going through the exercise of doing this. Do I have potentially any pitchfork low there? I've got the shift on, or modified shift. Let's go to the original. And lo and behold, so do you note that? Do you see that? We come right to the median line, to the tick. So there's your tell, and that's very common. That's one of Andrew's trading principles that we talk about a lot, and certainly we go over that in great detail amongst members. But so that it just shows you that it's trading very technically. Again, this does not happen randomly. Okay, promise you that. So there's the reason for the turn there is off of the pitchfork, right? We come right to the median line and then we rocket higher. So we have the confluence that I often talk about. We have the pattern ABC. We have the fib extension. We've got an alternate price projection here to the 1272. And we have the median line for the structure. So you've got a confluence here all coming together to give you an indication that that's a good potential buy. But two, a solid pivot now to work from because of how technical it is. So, that's why it's always worth going back to it and say, is that my good pivot? Does that make sense? Why does it turn there? As opposed to, well, it turned there. I don't know why, but it did. I would just encourage you to go through that exercise, and you'll learn in the process of doing that. So the next time you see that, that's something you'll pay attention to as a potential entry, but also just understanding the way the markets move. Nothing happens in here randomly. All right, so let me pull some of this off so we can pull back out. So we know we've got a good pivot there. So this is good for us. So we've got a 1 and a 2, and let me just open this back up again. So. Oh, let's see. All right, I got to kind of reframe it here. So let's get that off. So let's scrunch back up if we can. There we go. Okay, so then we get this monster spike, and this I can just look at that and tell you that we're beyond. I don't think there's, even if we were at the 4. I don't think we've got a measure there. Yeah, we don't. Let's just double check it. If even the 400, if I go to that 2, well. 4618, we're 2 and through it. So, clearly that's an extreme. All right, so, we could, I'm sure if I took the time to go through and measure these relationships, we've got some fib relationship here relative to these swings, but I'm going to spare us that. Since I know now I've got a good 1-2 in place. That's really what I want to focus on here, is that I've got a good 1-2. Well, if indeed I've got a good 1-2, so of course I'm going to wick the 1 high because I want to pay attention to that. And you can see here, so I guess I can take this off now. That was that prior swing high, potentially some support. So given that I've got this 2 low, let me just measure it up. So if I take that 2 low up to this high, well, that would certainly be a deep 4, right? So, but given how extreme this is, it's not unheard of to have a 4. What's important is that we don't overlap the 1 high. So we get this spike even through the 786, but it gives us a couple of pivots here that we can work with. So if I pull right there, okay, and then from that, then let me blow in here a little bit. Then we get this reaction and we get an impulsive move. So let me get this up so you can see it. The problem when the scaling is that huge, it takes you a minute to get it centered and in a scale that you can work with. So here we have the impulsive move off of this, and we get a slight overlap here for the 1. So we get a diagonal. So we got do you see that? So we get a slight overlap here. There's our 1 high. There's our 4 low. So we get a little overlap. Okay, so I've got a diagonal. So I've got a leading diagonal into my 1 wave. Right? That's where we would expect it. 1 wave or an A wave. All right, so given that, now do I have something? So I've got multiple pivots. So I've got a 1, 2, 3, 4 that I can work with. Okay, and now I've got a leading diagonal telling me potentially I'm off to the races now with a 1, 2, 3 with an impulsive structure. So let's get my 2 in here. So if indeed I'm complete here, if I've got a 1 and now I'm looking for my 2, of course I'm just going to do the rudimentary pull here. So I'm going to go from my low here, and we get. Here's the 50, and yet again, the market is strong enough, so you get here's your A, there's your little B, and there's your C. That may be the 618, but you're right to the Vegas wave, and it's a little bit of a front run on the 50. So the market is strong. If we're not getting the 50, and you're getting that kind of front run, buyers are not waiting. They want to get it. So just out of curiosity, let's see if that's an A, that's a B. I got to put the 618 in there because I took it off on the last time. Yeah, so I would have been. So I did not buy it there. I can't remember if in the room we were looking. If we were looking, we were looking here in that window, and we don't get it. So there would have been the potential buy. You know, if I had been watching that low develop, I would have missed it, and I did not get that trade. But there again, that's kind of, we're seeing that a lot in crypto. So we're getting these shallow C waves. We're seeing it all over, and given the strength of the market, you know, it's not terribly surprising. But what it shows you is that you've got to be looking for it. Right, so we get this triangle structure here. Yet again, we've seen this a lot. So if I can draw it, we get this action here, and we're seeing that a lot because the market's so strong, the demand is so strong. We're not getting everything is being front run. So C's typically would be down here. So the more typical location would be down here at the 100%, or even here at the 618. So we're getting, because the market's so strong, the demand is so strong, everything's getting front run. So you've got, you know, Elliott wave aside, you've got a nice little descending triangle, and boom, there's the break. Here's the Vegas wave. So we break the Vegas wave, and then we're off. So okay, if you missed that, as I did, and we missed it in the room, well, where could we be going? All right, that's all you're trying to do. Now I've got good pivots that I feel comfortable working with. What could be next? So let's take some of this off. So here's the algo target. So they get there, then they get to and through the 618. So you've got potentially now, you've got an Elliott relationship. So let's look for a relationship between the one wave projected from our 4. And you know, we get just a few shots. We're through the 100. Okay, so we can qualify this as a third wave, as we're longer than the first wave, right? So that looks reasonable. Here, you know, so for this break here, we get, so you can see a little subdivision as well here. So if I were to open this up, you can see a 1. There's a little 2. There's my 3, 4, up for the 5, right? So I won't label it for you because I think you can see that. And we've got a qualified third wave. So yet again, I continue to be wicking out technical pivots that are not only in line with our expectations for fib pulls and algo targets, but we've got good Elliott wave relationships in play. So given that, so if we're comfortable that we've got a third in play there, the other thing, of course, that you would want to do is check for any market geometry. So if I'm pulling there as my, if I'm pulling there as my 2, we're a little shy here. So this is a potentially a tell that we don't, the fact that we don't make the median line. Now the fact that we don't make it, let's just quickly check on the alternate. So if I go to the shift, kind of interesting, right? So we're to and through. We get the outside edge here. Let's go to the modified shift, which would basically be a channel. Okay, that's interesting. So this is something that I've shown before. The modified shift is often identical to a channel. So if I were to do this, right? Do you see that? Do you see how the modified shift, as I've mentioned before, it goes up 50% in price from the first 2 pivots and over 50% in time. But you see how close that is to a channel? So if I took that off, right, there's a channel, right, and here we've broken the channel, right? So that's where the pitchfork will have the advantage because you get those additional parallels. So if I go back to my pitchfork and I work from my 1 low here, then I go to my 2. Okay, so you see how the outside parallel here catches it to the tick. So that again, so we get confluence, right? So we have from the 1 to this shallow C, we get confluence here. We get just it's interesting. So the 1272 is what we hit previously on that last low. So we get this as well here. We get a wick of the outside edge of the upper parallel of the median line of the modified shift median line with the 1272, just as we did on that prior swing low. Very interesting. So again, you know, this is very technical, so this is not happening randomly, is the point I'm trying to make. So good pivot here. So I've got now, in addition to the larger degree 1, 2, 3, 4 that we've got within now the expectation for a 5th wave, which would have, you know, targets way up. If we're going to go, if we're going to go to new highs, well, here fifth would be, you know, potentially up here, right? So you'd have, because it's impulsive, the 4 not overlapping the 1, you know, we would have some very large targets up beyond the third. So if we took the length of 1 projected from the 4, we're going to have some fib targets that way higher. So it's possible that we're just putting in the 1 wave. We could be putting in the 1 wave here of the fifth. We don't know, but we can see the market is trading technically. All right, so given that, so we go from one edge, we're then we go to the 200%. Now let's measure that, since we've got this box up here. We know that's potentially good. So again, I think the point I try to make in every one of these videos is that you're seeing the same analysis done the exact same way every single time, which is always the point I'm trying to make. It's consistency of approach. It's doing the same thing over and over again every time. That's your advantage. That's really the point I'm trying to make in these videos. If you've watched enough of them, you're kind of going to get the idea, because I approach it exactly the same way every single time, which is, you know, again, granted, I've been doing this a long time, but that's really the point I'm always trying to make to you, is doing it the same way is your advantage. Don't look at that. Don't get distracted. If you were to try and attempt to trade this way and you got stopped out a few times, I would encourage you not to abandon it, right? So the key is I often will tell you, don't take any big hit on any one trade. Don't get knocked out on one trade because you got excited about a wave count or a fib pull. You know, this is not easy money. And in crypto right now, there are a lot of people under the illusion that this is easy money. And for many people, it has been easy money, at least so far. I promise you that's not going to last. This is not an easy way to make money. This requires a lot of skill, a lot of discipline, a lot of study. And sure, everything is going straight up right now. Well, not everything, but Bitcoin is going straight up. But it's leaving some casualties, and not everybody is holding. A lot of people, you know, are now doing some foolish things just to try and get involved, right? So FOMO is relentless in Bitcoin now. You know, we're in the mainstream media. We've got, you know, one thing that I've commented to members is that Wall Street is coming, and they're coming soon, and Wall Street does not want to buy at all-time high prices, right? And once it gets easier to short Bitcoin, expect some extreme volatility. You see it in Forex all the time. Wall Street does not want to pay these prices. So it would not surprise me at all if a reasonable, not insignificant correction is coming. I'm not talking about the end of the bull market, but I'm talking about Wall Street coming in here, being able to push big money around, being able to short the market. We've got weak hands in the market. We've got people over leveraging, overextending just to get involved in Bitcoin. But, look at today. We're here November 29th. You had a $1,300 1-hour bar in Bitcoin today. It's the time to be cautious, not reckless. So, I digress. Back to the point, right? Just be careful, right? So here's a market that's trading very technically. So we can look at this and say, okay, well, we've gone to one edge, then we've gone to the outside. Vegas wave holds it. So yet again, I get confluence. I get a confluence zone right here. Here's my 50, so that's a reasonable buy here. Here's my 50. Here's my wave 1. So I've got an impulsive wave so far, as long as this wave 1 holds, and there's my 618. So if we were going to break the 618, 65 window, we might come back and test it. But if we're going to break that, well, then we invalidate the impulse. Well, it could still potentially, as I was telling you, it could still be a one wave. Remember, we had a leading diagonal here, so we could have leading diagonal in a 1, followed by another leading diagonal in a much larger 1, given that this is our 3. So, you have to be prepared for those potential outcomes. But right now, this is very viable right here. Here we, in effect, we have a corner pocket trade. So we've got this pivot here. Here's our target. So we've got an algo target here off of this 50, right? And we know they're in. So there's their target right there. We've got if we've got good pivots here, and so far technically it would imply that we have good pivots, right? So we're working from the initial pivots here of the 1, 2. So we got another corner pocket. So we've got another outside edge just of the parallel median line. That's the 200% lower parallel. We've got pattern. We've got fib relationship. We got the Vegas wave. We've got the market geometry. We have this upsloping trend line here that we drew. So, the fact that we went a little shy here doesn't surprise me. But where's our target? We've now got 80% probability. If this is going to continue, we've got 80% probability of getting to the median line. In conjunction with that, we've got an algo target here. There's the negative 23.6. There's the algo target for a potential wave 5. Well, that makes sense. Well, since I have an impulse here, I'm going to measure my wave 1. Here's my wave 1 from what is currently now my wave 4. And take note of that. Now look, so the most common target for a fifth is 100% of wave 1. Well, look at this. Again, confluence. Right? This is what I try to show you guys every day. Confluence zone. Now, that doesn't mean that I'm picking a top here. That doesn't mean I'm saying, well, that's where the market's going to turn and then we must then go back down. That's not what I'm saying. I'm saying you've got very strong probabilities that if we're going to continue to move higher, this is a likely target. Now, just because it hits that doesn't mean we don't keep going. But this is a very reasonable target. So if you were a buyer here, you could be a buyer here right now. You could be buying here with a stop under the 65. Very reasonable, because you'd be taking out the wave 1. We invalidate the impulsive structure. So no reason. So you could absolutely be a buyer, even right here. So if there's your target and there's your stop under the 65, it's not the best. You got 2.3 to 1. I like 3 to 1, but that's very tradable. Yeah, that's doable. You might wait for a little more of a pullback. If we were to open that up, do we have any kind of a 1-2? Well, you might get that back down. So you could look for maybe re-entry a little bit lower. That would reduce the exposure. And your target is up here. Now you're 3 to 1. That's a little more doable right there. So if you were looking for an entry, and again, just the same thing again as I always do, I'm just going to take this. I'm going to go from this low. Here's my swing high. Right, so maybe you're right down here at the 618 of that. So maybe we get a second wave here. So you're at that 618 here, looking for the move back to the median line, and here being our target. So now you're over 3 to 1. You might have to pull that down a little bit, just under the 65. So you're just barely at 3 to 1, depending on what your fill is, and if you're trading on Bittrex or not. But that's a really reasonable spot to look at. So maybe you've got a 1 and we got a little ABC coming in here. So reasonable spot to be a buyer here at the 65, because I like that limited risk to the downside. And again, nothing says that we have to top here. But that would certainly be a place to take a partial profit, given that we'd likely be completing that pattern. So then you'd go to your oscillators and look for maybe some loss of momentum, some divergence here, something. Right? You can kind of see it now. So potentially, if this is our 3, potentially we get some divergence there, but you don't know. So you mark this and you say, is it weaker? So you could hold it. Do we get to that level in the Elliott oscillator? Right, which is just a moving average. Right, so we're going to get there, just displayed as a histogram. So do we get to those old highs, potentially divergence? Do we get up into the hot zone, the overbought zone, as we did here, as we did here, as we did here? Right, so potentially, right, so that would, at very least, if you're getting into a fresh long here, that's a place to take a partial profit, maybe move your stop. For me, I'd move it to break even, allowing for more upside, because nothing says we have to stop there, and we may very well just get this kind of a thing. So if you're taking a partial profit there, then you might be looking for the next move down. Well, keep in mind, this is where you have to make an individual decision. Let's take that off. If that's a completed 5-wave structure, and perhaps it's just the 1 wave of the larger degree here, remember we've got potentially our 5th way up here. If this is just going to be our 1 and it completes here, if we get a pivot here, well, you got to keep in mind that now I'm going to have to take some of this off so you can see it. Now, if you were to complete up here, now you're looking for a retracement of the entire thing. So let's just assume we got that. So where's the next buy? It's down here at the 50, right? And you got this trend line to deal with, right? That might be something else to keep in mind. If we're going to complete here and pivot on the median line, well, now you're looking for a two wave. So potentially you've got structural support here from the prior one, but that's not an essential pivot that you couldn't overlap because we will have completed the 5-wave structure. If big if, I'm just freestyling here. If we turn here and pivot on the median line, then we're looking for the 2. The 2 is really between the probability zone is between the 50 and the 618. So you'd be looking for this. Where's my arrow? You'd be looking for this to come down, and you'd be looking for it to do it in 3-wave subdivision. Right? That's what you're looking for. Whenever you see that kind of pivot, then you want to look for that subdivision here that gives you increased probabilities that I've got pattern, not just fib, not just geometry. I want all of it. I want as much benefit as I can possibly get. I want confluence to give me a higher degree of probability that I've got a potential turning point there, and I've got a reasonable risk reward. So if I'm a buyer here, stops under the 65. Reasonable. So if that were the case, if that's a 1-2, just again, so you get the idea on risk reward. If we were to top here, and that's a 1, and we come down, let's just use the 50. If that's a 1-2, well, we've got to at least go 100% of the 1. Well, that's way up here. Now think about that with regards to risk reward. Let's say we're a buyer here at the 50. Here's 100%. If it's going to be, if it's going to be the 3rd wave, we've got to at least do that. That's 5.7 to 1. Where's the more likely target if that's a 1-2? It's way up here. Here, the likely target is up here at the 1.618. Now you're at 9 to 1. You see that? So, you can take that knowing, well, if I do take that, if I do take that, that's risk reward that you can live with. Now, given that that's not an insignificant amount, there you might take a smaller position initially, right? Confirm that you get a pivot here. So you might do this. So you might take a bite size there, and if you got that kind of thing, then you're looking for the next 50. So then you're looking for this. So you get a higher low to tell you that potentially that's underway. So this might be 1-2. Right? You see that just is here. Right? So you could have waited. So just like here, like as I was just showing you, this may just be the 1-2 of the 5th. So if you want to be more conservative, so you could wait for that before entering. You could take a small partial here on the idea that you're going to track the algos here with a buy at the 50 because they will be buyers there. If you're going to buy the 50 there, well, then you wait for the little 1, and then your first entry is here. Now your risk reward is even smaller, or your risk is even smaller. So just for the sake of the example, if I pull that down a little bit, if I can get it down. If you got a 1-2, well, now here's your pivot, right? If you're operating on the premise that the 50 is the good pivot. Right, and again, I'm just freestyling here. If that's your pivot, well, then no reason to take it below that, because if we've got an ABC and we get just exactly what you'd look for is 5-wave subdivision in the C. If you went down to the 15-minute, if your assumption is that is your good pivot low, then why would you do this? Because you're already making the assumption. Now you're rationalizing. Oh, well, maybe I got it wrong. I'd rather just be out and see what happens. If we're going down here, I can always just get back in. See that? So that would change your upside as well. How am I doing on time? God, apparently I'm wordy lately because I always try and do 15 minutes, but I've been doing longer than that. So there's good lesson there. I hope to do it against Bitcoin as well. Let me. All right, I'm going to do it real quick just because there's a good lesson here, and I was showing this to members. I don't know if all of you saw this. So this is something I posted up to members that's a good lesson here. So this is Bitcoin. Bitcoin Cash to Bitcoin on Bittrex, and this is one of Andrew's median line trading principles. This is principle number 4: failure to reach the median line. That is a tell implying weakness in the market. If we don't remember, so we had a successful corner pocket here. So you had the corner pocket, but you don't make the median line. Now, the fact that you don't make the median line is as we start to sell off. That's a potential tell. But you had, let me just move this little bit off if I can. Yeah, hang on. I can move this back up here. Okay, so if we move that off, so take note here, right? So we had this prior pivot high here to this low. Well, we go right into the box. We go right into the 61865 box, and we get a 5-wave structure here. So the fact that we do that, and you've got to pay attention to the fib pulls going the opposite direction. I know we focus on longs, but you can't ignore the shorts. So we had a significant pivot here, and if I recall correctly, that pivot was relative here, the reason we chose that. So if I go down here, I go down, where's my low? There it is. Right, so this was here, just shy of the 50. So likely a front run on the short of the 50, and then here was the negative 23. That's why we used that pivot here. I'm not just randomly picking that. That was a front run on the 50 where they took it down to their target here, negative 23, and where we got that low. So pulling that off. Okay, and then we look at this again. Since we had that, since we were at the 618, now I got to remember which one I used. Yeah, there we go. Since we had that, we have Confluence. All right, so is it this one? It was this one. Okay, so we go right into the box there. So we get a 1, 2, 3, 4, 5 right into the box. We know that's likely resistance just off of the fib pull. And we don't make the median line. Right, so this is a tell for us that we have weakness in the market. So if you were in the market here, that would be a reasonable time, if you saw that happen. Well, one, you're completing the 5-wave structure. But two, that's not a bad time to be tightening up your stop because you don't make it to the median line, because we don't get up here. We don't get to the median line. That's a clear tell that there's weakness in the market, and look what ensues. So if you took it here and you didn't move your stop, well, now you'd be underwater, or you're stopped out at break even. So it was not unreasonable to look at this and think, okay, well, there's a 1. But as you see, I don't like it as much here at the 618, even though you had a little reaction because of this weakness here. Because we don't make the median line, the trading principle implies that if you don't make the median line, you're going to get a move equal to or greater than the first impulse move up here. This swing high, I should say it that way. Equal to or greater than. And you can see that's exactly what we got. So if I measure this with an arrow, and then let's see if I can do this here. If I clone it, let's see if I can do this. And I turn it around. Maybe I can't do it. I'm going to change it, but I guess you'll be able to eyeball it. Well, you can just see, right? So we've already gone. So we're already equal to or greater than this divot, this length in price here to that pivot, and we know that was the 61865 box, right? Which we have to pay attention to. So we've gone. So that's trading median line trading principle number 4, right before your eyes. There it is. And in conjunction with Confluence. So what does that imply to us? That we have an A, B, and a C. So where's the target now, right? So that's way down here. So you certainly wouldn't, if you were long and you were looking for the 2 here, which is not a reasonable trade, but if you bought it there, look how tight your stop is, right? So if you're a buyer at the 618 or a little front run, you had the Vegas wave there. You had a lot of things there to imply that you might get a pop there, but this is a great example of why you don't need to take undue risk. So let's say you were a buyer there, and now you're looking for a return to the median line. Right? There's no reason to take that stop below the 6.5. Because your basis here is that you're going to turn on the 618, and you got a little reaction there. You did. But as soon as you broke it, no reason to be in. So look at that risk reward. That's 20.14 to 1. Very small loser, and you're out. And now the market, now you can look at that and go, well, I know why it's doing that. I can certainly look at that. I can understand. Because I didn't make the median line and I hit my little window here, which I know I got to pay attention to because Sam has shown that to me 500 times. We go 2 and 3, we go right into the little pivot. We come back here. So this was your opportunity if you were looking for a 2. Right, it was right there. But that's a great example of what I'm trying to show you. Is there's no need to take any more risk than that. I do it all the time. And I post these for members all the time. Very low risk entry here at the 618 with just a very tiny little stop. Now you can give that a little room. You can allow for a little wiggle room, and you could have been psyched a little bit here. Look at that. Since you got that, you had the little pump down here. So this looked like you had an A, B, and then you got 5-wave subdivision. There's a little pump. So given that would be a good opportunity to tighten up your stop. So you have very little risk. So, you're likely a very small loser. And now you can kind of understand and go, okay, well, I've got a failure here. I've got the market moving down here. Now I'm trending lower. I've got lower highs and lower lows. Until we see some evidence of a new impulsive structure here and we get a good pivot, which at this point, I'm sure I would just eyeballing that. Well, we're just right to the 786. So, this sure looks to me like we've got an ABC, and this is, I can't quantify it yet, but I've got a trending move here from swing high to maybe that's a swing low. Is that a 1-2? Doesn't look like it to me. I would be avoiding this trade right now until I get more clarity on what we've got. Right? This it's just a good example of it, right? So we wait to see Bitcoin Cash to Bitcoin if that's a trade there. Maybe we get a pivot down here at the 786. Maybe we're going down to the algo target down here. That would be ugly for Bitcoin Cash, but wouldn't be surprising. All right, I've gone long today. Okay, I'm going to wrap it there, guys.